So good evening to all our mentorship traders. We are in our mentorship invest meet Friday evening, 9 o'clock. This is the 8th of January 2021. I'm not too sure if I should have taken the session today because you might get some odd background noise and music at my end today. It completely slipped off from my mind that there is a full-fledged 2020 UPL, an IPL kind of a mini series going on at the community where I live, the gated community where I live. Amazing setup, floodlights, running commentary, music, pom-poms. You ask for it, they have it all. So you might get some background music, exactly the way we hear while we watch the IPL matches. So excuse me for that. I will try and be as much loud as possible so that it doesn't bother you. Now, I welcome all our new community members. With this, let's move ahead with tonight's session. Let's talk about the markets, been on a roll, and then we'll go on talking about the prospective trades, medium to long-term trades for the next week. So here I am. I'm using the TradingView platform with on my left hand side is the daily chart, on the right hand side is the 75-minute time frame. I would like to first bring your attention to the larger time frame, which is the weekly, which gave us a big breakout here at 13,000, and after that it never looked back. Generally, when we have these kind of channel breakouts, prices do tend to give us a throwback, a retest of the channel, and then picks up, but nothing whatsoever at all in this case. Exceptionally strong market from the long-term charts perspective. The daily time frame has inched further up. Let's zoom this out for you. The daily time frame has managed to break above this rising channel on the upside. Pretty decent closing for the day and for the week also. No signs of as such worry from the momentum indicators, and considering the fact that it took out 14K, it stayed about the 14K, it never actually, the 14K was not threatened at all. So it seems like the index is taking out milestones one after the other without much of I would say volatility. So 14,370, I think is all eyeing towards 14,500, and furthermore, let's not doubt the strength of the underlying trend and continue to ride it as much as possible. I have been particularly quite cautious for a couple of weeks now because of the nature at which the exponential nature, 10 days on a roll going up. So it makes sense to be a little bit cautious. And so I've been, but such has been the underlying trend. This is a 75-minute time frame chart wherein we can clearly see the breakout from the index coming in outside the blue channel here. Then it gives a throwback, which is retest of the blue channel, and now it picks up. While it did the retest, it broke away from this slightly steeper reddish channel that I had, and I've been talking about this for the last 2 days. So the bears had a chance here. What I felt at yesterday's close, the bears did have a chance. If the market slipped and it broke below 14,100, then the bears had a chance. But considering today's close, prices have slipped back inside the red channel. And okay, 1 minute. Yeah. So considering this being the case, I don't think so that the index will be in any mood to come down anytime soon. On the contrary, it's showing very good strength. Divergences which had taken a shape had completely dissolved. So let's not judge. Let's not try and predict the top here and expect that the trend will continue to rally itself further up. We had 10 consecutive positive closes from the Nifty, after which there was 2 marginal negative closes, nothing much, just simple hiccups. Excuse me. And after this, what we have Today is an exceptional move up, and the weekly charts are also pretty strong, gaining week after week. So we are in a very price-wise in a very strong market. Macro parameters also would improve going forward, considering the kind of markets that we've had. Now, I have the RRG charts here with me. These are all the sectoral indices. Let me first roll it down to 1 week for you and sort it in terms of percentage change. All sectoral indices gained this week except the CNX FMCG, which was marginally negative. Again, very similar behavior, if you'll notice here, which I discussed last week, is sectors which are leaders, which are laggards, which are improving across the board. There is gains across the board, which clearly suggests that this is not a weak market, which clearly suggests that this is a broad-based rally. Now, if I sort in terms of the tail, then of course the metals, the private banks, they have gained. Over here, the PSU banks have gained. The infra has picked up, which is 4.3%. Amongst the laggards, you can see media, you can see auto. Now they are the ones, though this is just 1 week. That's why they have gone into laggards. Let me just scroll it to 12 weeks. Yeah, now you take a look at it. So the metals have found themselves back into finding some strength, so that sector stays strong. Private banks losing a little bit of momentum here, but the strength is there. So this is typically buy on a dip. Look for private banks that you can look to buy on a dip. Same for Bank Nifty. Real estate is picking up strength, no drop in momentum here, so continue to stay bullish there. Financial services, similar like private banks and Bank Nifty, is losing momentum, not strength. Losing momentum means they might get tired. They might come down in the short term. If they come down, they will bounce back. Very high chance that they will bounce back. Then we have the mid caps and the commodity stocks. The ones which are improving, public sector enterprise, we have FMCG, which is picking up thanks to the move we had in stocks like ITC recently. PSU Bank, State Bank of India, is also doing pretty good. Your infra and consumer durables. Consumer durables, very interesting. I think this is what we discussed last week, if I'm not mistaken. FMCG and consumer durables is something that we would keep a close watch on because they are in the improving quadrant. They are picking up momentum. So eventually, ideally, they should pick up relative strength, which means they will try their best to outperform the market. If that happens, and we're talking about FMCG consumers, then maybe when the market tires down and if the financial services, bankings and metals slow down, that is when probably we can look to shift from that pocket to consumers and FMCG. So we should have our stocks ready then. IT has been gaining pretty strong move across the board from most of the stocks. It is weakening because, of course, it was the first mover, and now in terms of relative strength, it is losing out. So any gains from IT from the current juncture, you can use to book partial profits or go slightly underweight. Don't exit, but stay underweight. The reason why I say don't exit is because it is yet to go into the lagging quadrant, and from weakening, just a drop of little bit of momentum and it can bounce back again back to the leading, which I think we saw in metals. So this is highly possible, and that's why I say don't take chance by exiting it. You never know, but don't go overboard on IT stocks. Auto is something which is now lagging. Though stocks have picked up exceptionally well this week, we have seen some good move coming in from those pockets of stocks. But this can be a slight worry for us. The auto, the pharma, energy is predominantly overweight by Reliance Industries and media, which is essentially Z and PVR, which is in the FNO. So overall, I think the market's doing pretty good. The relay between the sectors, and now what we've seen for the last 2 weeks is broad-based rally. The mid and small caps are outdoing the Nifty. The trend is strong. Any short-term dips are getting bought into heavily and fast. So I think staying cautiously bullish is not a bad idea. Looking for breakout trades or the swing trades on the long side is not a bad idea. Stay away from growing contra short is also not a bad idea, because it wouldn't work. So stay put there, and keep a close eye on the FMCG and consumer durable space. And if you see any weakness coming in from the banks or the metals kind of universe, then these sectors can bounce back. We can call them the defensives. But private sector banks, one should look into to buy once you get any kind of short-term correction, if at all. As of now, we don't see the possibility of such happening anytime soon. So here we are. I'm going to quickly roll down the sectoral indices here on stock charts. If anything meets the eye, nothing on the bank Nifty, strong trend holding well. CNX auto exceptional move today. Though this is a laggard in terms of relative strength, but still in terms of price, none of these sectors are showing any signs of divergence or weakness. Energy, primarily Reliance is overweighing this index. Financial services looks good. FMCG kind of has slowed down over the last few days, but I think this sector can give us a breakout. Infra is also doing good. Nothing as such to, let me take a look at. Okay, now this will be an interesting sector to look at. CNX IT, we just spoke some time back that this guy can slow down. I can clearly see a bit of short-term divergences with relative strength index 9 period. I'm using the 9 and the 3 here. So I definitely see 2-3 bar divergences shaping up on CNX IT. So be a little careful on IT next week. It can take away on the upside, especially the way it has moved. If it does, then it's fine, or else we will wait out at least Monday and then take a call. This is the second page wherein we have the metals, strong move. We have the mid caps, exceptional rallies. I think last 12 or 13 days, only one negative candle there. That was CNX MNC, Pharma, PAC. Each and every sectors have shown strength, barring a bit of energy because of Reliance. Most of the sectors have participated. This is a broad-based rally. This is a broad-based market which is doing good, which has done exceptionally good 2020 and 2021. It has also started in a very positive note. 14K has been taken out, 14K has been held. There was no threat when the bulls took out 14K, and as of now, it seems like 14,500 is on the cards. So let's conclude our weekly take on the indices, saying that let's ride the trend as long as it extends itself further up. Let's not try and predict the top, because that won't yield much. And try to be cautiously bullish and look to trade short-term breakouts or short-term swing long trades, right? So that's it for the weekly analysis and view. Now let's move ahead and talk about our mentorship invest session.